Traditional markets are calm. Volatility is dropping. By all normal rules, it is time to buy. Yet, our system is holding strict cash. Why?
The answer is not that Bitcoin is failing. The answer is what is happening underneath the price. Bitcoin's internal breadth has collapsed to 0%, and the trend is deteriorating. This means broad market participation has vanished. Price can still move, but almost no assets are confirming the direction. The move lacks conviction. It is hollow.
This weakness cascades. When Bitcoin loses participation, altcoins stop rotating effectively. When altcoins stall, speculative liquidity in meme coins dries up. Every layer of the market is showing the exact same signal: low conviction and stagnant participation. So what does the system do? It follows a strict, non-negotiable decision hierarchy. System protection and portfolio guidance come first. They come before macro conditions, before price momentum, before sentiment. Right now, the macro regime is constructive, but internal structure has broken down. Breadth is at zero. The market has shifted from expansion to neutral.
As a direct result, the deployment gate is locked, and system readiness sits at 0%. Therefore, deployment is denied. The portfolio remains in strict cash. This is not a prediction of a crash. It is a rules-based response to missing confirmation. Low volatility removes one form of risk, but it cannot create the internal participation the system requires before committing capital.
So when does this change? Not when the macro environment improves further. It is already constructive. The position changes only when verified internal conditions heal, when Bitcoin breadth recovers meaningfully above zero, when participation strengthens across altcoins and speculative sectors, when the deployment gate reopens with sufficient system readiness. Until then, cash is the position.
Preserving capital in this environment is not passive. It is an active institutional discipline. Markets reward confirmation, not optimism. When internal structure fails, the disciplined choice is to wait for the data to improve, rather than force exposure into a market lacking broad participation. This is the exact intelligence driving today's decision, based on the July 23rd scan. Stay disciplined. We will update you when the data shifts.
Want a verified institutional edge? Join the Axiom Intelligence Specialist Desk. Get high-conviction crypto intelligence and vetted execution protocols. Stop guessing the market's next move. Normally $62.49 a month, it's now $49.99 a month. Or test the system risk-free with a 3-day trial for just $5. The link is in the description.
If this analysis added value, please like, share, and subscribe to keep this research accessible. Stay disciplined. Protect your capital. See you in the next briefing.